I just want to take the first moments out of this video to say that if you like these videos, if they're working for you, if you've made some money, or you just want to stick around and see how to do stuff, go ahead and subscribe now and like the video if you can. It helps me know that people are actually watching the videos. And with that being said, guys, let's get into the TA here. Right now we are using a new app. I've been using this on the computer, but now I'm using the app in its trading view, and I can actually chart on the computer or chart on my phone and actually look at the charts that I changed and live change them throughout the day. So that's been helping a lot. And your boy is getting things kind of right online. I mean, I started charting these things, and everything that I've been charting has pretty much come to fruition. So, I mean, that being said, guys, we should be seeing the turnover and the return on investment. And, you know, I made some bad trades. I wasn't trying to be arrogant about anything that's saying that I'm making a bunch of money. I'm not. I mean, all I was saying was that yeah, your boy makes bad trades too. And if you're losing trades or whatever, you know, it's because you're doing something wrong. I mean, everyone's going to lose a little bit on a trade, but if you're constantly losing, then you are doing something wrong because you're not giving yourself a chance to make back those losses. All right? And so that's why we're charting now, and we're giving you guys the charts too, so that it's not just, oh, yeah, we made a bunch of money by not doing anything. That never happened. We had to do a lot of work. Okay? But let's get into the TA, and I'm going to show you guys what to expect, what's going on now, where to enter these trades at, because that's the biggest thing. It's like, you want to get into trading, you got some money, you're ready to go, and you just jump in and you put the money in there and it just goes and it's gone, and you're not giving yourself a chance to enter a trade at the correct time, and then give yourself some profits, exit the trade, and when you've made a bad trade, try to recover from that loss, and not just go into this deep hole that you can't dig yourself out of. So we're gonna look at Boyle first, and then I'm gonna show you QQQ, and then during these I'll show you like basically where the entry and exit patterns what they would look like, even though, you know, technically we're not entering a trade today, and we're not exiting a trade today. It's just basically accumulation day, depending on what the chart is saying. Okay, so I'm gonna zoom in here. I mean, look at this is Boyle. I mean, you know, we were up. I mean, you're talking being up like 300-400% from where we're at right now. Okay, so not saying that it's going back there. This Boyle is a futures contract, so it does have rollover. You can't just sit your money in here forever. It's just going to take your money. Like, this is what that means is that a futures contract is going to constantly roll over and lose value over time to keep up with, you know, however the money works with that stuff. I couldn't tell you how that works, but you can't just put your money into this Boyle and think that it's going to sit for 2 years and you're going to be rich. This contract doesn't work like that, okay? You have to get in, you have to get out when the charts tell you. Alright, so on Boyle here, I mean, this low here where the A is at down here was the all-time low for UNG and natural gas. Okay, and Boyle is 2x leverage of basically the UNG stock, which is US natural gas. It's comprised of like 3 different other indices that make up Boyle. So, but this low here was signaling the bottom of the natural gas market, and it had a massive rally, which was like 40% or so, and then it crashed like 40%. Okay, so I think that rally was actually more than 40%. You're looking at probably 60 to 80% rally on that, you know. And this, and you're talking this, that's times 2, because this oil is 2x leverage. So you're talking over 100% of your money off of this first A, B, C, D, E Elliott wave here, okay? And we're just trying to repeat that, and you know, it goes down. You got to pull your money out when you hit this trend line, because it's going to go down 40%, and I mean that's almost all of your money gone. If you want to play oil that's running 100 to 300% changes, your money's going to be completely gone playing this stock if you just think that it's going to be all automated. It's not. Okay. That being said, we're looking at charting Elliott waves here, which is a little bit difficult for most people because they can't see patterns very well. They don't know what's going on. So we have an A, B, C, D, E pattern on the way up into this head. That doesn't mean that it's a head. I'm just using the head and shoulders pattern so we can keep moving it back in time and knowing the market. If you're looking at that A down here and this little bull here, you're looking at the two lows for the last 2 weeks, and that's forming us a nice trend line, which now we can base all of our next trades off of, saying that, hey, when we hit this trend line down here, that's a buy signal. We're ready to go bullish on natural gas. And vice versa, when you hit all the way up here where this D wave ended, it's supposed to be D or E wave. This Elliott wave might be screwed up here. So I was going to delete that one, and we need to have a new one anyways. But if you see like right around D there where the head is hitting the top of that trend line, we got that trend line coming off of the last peak that we did from this other down wave market here, thinking that we're going to head and shoulders at some point here, just like it did back over here. It did it right there, it did it right here, right here. So, you know, the market doesn't always do the same exact thing, but it rhymes, they say, okay? So, let's get back in here and let's zoom in here, since, you know, people were thinking that oh, right here where we hit D, the letter D, they came out on the news and we don't need to buy natural gas. That is the biggest crock of crap that I've ever heard. Natural gas is a necessity in the United States. Your restaurants run off of it, your cities run off of it, like all this other stuff. It's not just people buying propane for grills, guys. So when they say, oh, we don't need a lot of more gas, that means that, oh, there were some people that didn't need to refill their LP tanks for their house heating. That is like 1% of the actual natural gas market, guys. That means nothing, okay? All it did was cause this massive 40% crash and gave you the opportunity to not only make your money going downwards with the inverse stock ETF called Cold, KOLD, which is the inverse of oil, not only making your money on that, but also making your money back again like 2-3 times over on oil. So if you entered oil here at A, you rode it up to D, you exited oil and entered cold there, and then rode that all the way down to where our little bull is here, which was a whole Elliott wave. We can map that out if we want to, but we don't really need to. We need to, but that was a whole Elliott wave, A, B, C, D, and E. And then you would hit this lower trend line here. It did go a little bit past it, but you hit the lower trend line, and then you exit cold, and you enter boil again. And you need to have this graph in order to know what to do and when, right? And then you make your money up again. So you could have made your money 1, 2, and now we're on the third time, and then we're going to do it 4 times. Who knows how many times at some point it's going to break one of these 2 trend lines, and you're either going to be rich, or you better be rich, because you should be buying on the way down too, okay? So it doesn't make any sense how, like, if someone says, oh, I can't understand this or whatnot, that's a complete crock, because this is easy stuff, guys, okay? Now, we're in the 4-hour time frame here, and we're going to go down to the 1-hour time frame, because that's where my graphs are set up to be in. And if you look at this is the bottom, right where our bull is. We're zooming in here. We came down off this Elliott wave. We kind of, you know, hit past our mark here. Our original triangle was right here, but it was probably set up for the 4-hour time frame. But we ended up coming down here, and that triangle is probably just for the other time frame, but it did hit right down into there and gave us our buy signal. So the other day, yesterday, we came in and we set up this pitchfork angle here, so where we should be jumping off of, and you can see what's happened today is we rallied off this huge and we made a bunch of money, and then we consolidated to the other side of the channel. Okay, didn't really expect that, and it looks like we are just poking out of it right now, but you know, the channel is not going to be exactly on with everything. It's just speculation, right? But it showed us that, hey, you know, maybe we were looking at doing the right thing, and we should have yielded some money out of that trade there. Okay, so I've got the bear up here, and I got a secondary bear up higher, but we're looking to stall around the second bear here. And basically what's happened before is between about 4 p.m. and 11 a.m. and if you look at the top of this peak right here, we're looking at March 23rd at 11 a.m. right at 11 a.m. Okay, so this has happened before, the week before, where you get this 10-15% spike immediately between 4 p.m. and 11 a.m. So be watching out for that, guys. Tomorrow's going to be a huge day. We're going to make a buttload of money on Boyle, okay? So back to the entry patterns. Obviously the entry was down here at the bottom. It's hard to view entry patterns on trading view here. I don't like it. Like, I'm used to taking my inner patterns over other things. But if you look at this trade here, this is what you're going to call a 3-try failure, or inverse 3-try failure, because we're not trying to go up, we're actually trying to not go down here. So this inverse 3-try failure on the bottom here, you're also sort of having that going on the top, also with some head and shoulders and stuff, so it gave us a really sideways consolidated day. Let's go down here to the 5-minute here. Obviously we can see that the best entry today was right during the start of the day. We had a big downfall, and then this is where our signal went off, that saying that we should buy, because it was at, you know, it was at a good percentage. I think it was like 5 or 7% or something. So we get a buy signal there. Came around, we fooled around and all this stuff. We came down for the second hit on it, which is going to give you the accumulation stage. Just take another buy right here. You could have taken a buy right here. You could have taken a buy right here. You could be buying right now if what we think is going to happen is about to play out. Okay, so you're looking for the lows on the day to enter your shorts down here at the bottom of the trend line chart. So let's pull out our 1 hour again. So we want to take our buys down here on this green trend line, and then we're going to ride it all the way up, and we're buying cold where basically wherever we stall, we're going to hedge with cold and leave a runner. You always want to leave a runner, because you could sell out and the thing's going to keep on going. So if you left that runner going, you're going to pick up that extra cash. Okay, that's pretty much what does it for Boyle. I'm looking for the top to happen Friday still. It might have moved. We might have moved it out Tuesday, next week, Tuesday, for the crash. So yeah, we moved out to Tuesday, Wednesday for the crash. So be looking for natural gas to go back down around Tuesday or Wednesday if we peak all the way up to the top, and we'll be rich, and we're going cold, and we're going to get even richer. That does it for Boyle. Let me pull out TQQ real quick, and I will show you guys that exactly what I predicted was going to happen. We did this yesterday. We came in here, we charted our Elliott wave, A, B, C, D, E, and we ended our Elliott down on the trend line the lower trend line and gave us our bullish bounce in our buy signal. We warned that we were going up, that you should get out of SQQ and buy TQQ, and exactly what happened played out today with the whole day, and we're looking at charting our new Elliott wave up. And I try to do that on here. I haven't tried it, but I don't think we can do Elliott's not on this chart here. Let me see here. Indicators? Technicals? Strategies? Anyways, I'm not like good with. Here, it should be in here. Elliott wave chart pattern form. Okay? So basic. Oh, you gotta buy to use that on here. Alright, well, we're not doing that. But I can show you that it's A, B, C. It's like the one that we're seeing, but it's inversed. So A is at the bottom. You go up to B wave. You come down to C wave, which is around 21. This was the end of B wave here, and you pop up to C wave, D wave, and now we're on E wave, and we're going to stall around 2290, maybe a little bit higher, because if you look at other charts up here, it's gone a little bit higher, so that could end up happening. And then you're buying SQQ, so you're right around your exit on QQQ right now, and then you're looking for your entry on SQQ. You're gonna ride that all the way down until you hit this lower trend line, and that's it, guys. It's really simple. Hit me up if you need more help. I'd love to show you guys exactly what to do. Alright, you guys take it easy. Hope you make some money tomorrow. I gave you the ideas. We're going up on Boyle. We're still going up on QQQ, but look to be buying short and riding that downfall. Have a good night, guys.